Let's talk about tax drag because I think it's very important. Okay, structure over deduction. Okay, you want to pay yourself tax efficiently. For instance, if you do have a W-2 income within a business that you own, it is stated from your CPA that you've got to pay yourself exactly what you would pay somebody else that you had in that position. But there's a caveat there, right? And if you've got a conservative CPA and you're working, for me, it was auto repair shop counter. Let's use 100 grand as a number. That's maybe what it would cost me. Maybe 60, maybe 120 for a good guy. Who knows? But 100K, I should be paying myself that. But the difference is I have income from so many other things. I wouldn't be paying somebody like me that works there part-time that number. So I want to reduce that so I'm paying less taxes at the W-2 level, as well as payroll taxes and many other things. You want to have tax rate arbitrage, meaning you want to have some that are lower in taxes and some to offset some that are higher in taxes. Okay, very, very important. And I'm not going to go in the weeds on any of these during this talk because we got a lot of ground to cover. I'm just covering the principles of tax drag. And then you want to plan your exit before you go in. And that's really setting up the right entities, guys. That is really, really important. In case you don't know that, should it be a member managed LLC, a manager managed LLC? Should it be a C Corp? Should I have a management entity that is a C Corp? Should it be an S Corp? There's so many questions that need to be answered. And that's all about planning because none of those are wrong. It depends on what your objectives are and what the goal is for that company and for that income. Very, very important. Okay. You want to invest tax efficiently by having savvy tax planning, which is the lowest risk way to immediately to boost your investment returns. What does that mean? And you'll hear me say this often. If you've never written it down, I'm going to encourage you to write it down. Tax savings is another income stream, guys. I don't know about you, but that $20,000 I used a moment ago as an example and saved taxes, that's another income stream. That's 20 grand, 5 grand, 100 grand. How about 250 grand? I've had well over that saved in taxes based upon strategy. It is so important that sophisticated tax planning is taking place once you get up to a certain level, okay? And even along the way as you go. So in general, long-term capital growth investments go in your taxable accounts. This is another strategy, right? Making sure that you have taxable accounts and that you have investments that go in your tax advantage accounts. What's a tax advantage account? A 401k plan, a Roth, some other tax advantage account that because it is a higher taxed income. And then leverage your unrealized gains to compound tax-free. Unrealized gains would be something that you have, let's say you're building a business. You bought it for $200,000 and now its net income has increased tenfold and so has its value because of that, probably 30-fold. That's unrealized gains and you're not taxed on that. So you want to leverage that. Maybe you're taking loans, low interest rate loans against that to continue to scale rather than selling off a portion of a company or what have you. Tax drag for third principle, pay with pre-tax dollars. And this is really just leveraging your business, right? Push all your legitimate business expenses into your business so you get an automatic discount. Okay, that's very important. Unlike an employee that gets taxes taken out and gets paid, a business owner or an owner of an LLC, and I'm a big proponent on everybody having an LLC, regardless of what your business is, receives the cash, pays for expenses, then pays the taxes based upon what's left. So that's very, very important. And then plan before you play. We just talked about this, the tax impact before you make the play. Meet regularly with your tax strategist and keep them in the loop as early as possible. I always make jokes about how my CPA has finally got me in a headlock because I'm a ready, shoot, aim type of guy. Maybe you are a guy or gal, and you're making moves only to find out that really you didn't do it as efficiently as possible and it's cost you quite a bit of money. So it's we meet regularly. Matter of fact, scheduled to meet tomorrow for this month. And as we get closer to the end of the year, we're meeting monthly because he wants to know what moves are you thinking about making? Has the moves you told me you were going to make changed? What's happening? What's going on? We communicate because honestly, guys, come July, I already know or have a unless something drastically changes that I wasn't planning, I already know what I'm going to pay in taxes in June, July, August. Really, we're just meeting to confirm everything's going as planned, because sometimes the income that I told him I think is going to happen doesn't happen. Sometimes an unexpected thing happens and we sell something and it does happen, and we need to plan for those things. So you want to plan before you play. Okay?